Hello and welcome to this edition of Closing Trades. With me, Aisha Faridi, Shrishti Sharma with me, and what a volatile day it's turned out to be. Started off with a positive, got a leg up from the global handover this morning, got that sold into, then again, pretty much every dip in the market got bought in, at least up until the noon session. And from there, we've had a one-way recovery of sorts. About a 1% uptick is what you're sitting on right now. 22,500 for the index as we speak. A good 100-point move is what you're sitting at right now. Metals, oil and gas and pharma, those are your leading sectors. And of course, oil sensitives as well are doing very well. Cases in point being some of the paint segments, Asian Paints, Berger, both have been stupendous winners from the word go. Some of the OMCs have been on a winning trajectory, and so is the move today as well, now that we're conclusively sub that $70 per barrel mark on crude, on Brent that is, to be specific. So BPHP both holding out very, very smartly. And then of course, Tata Steel, Hindalco, these are all stocks which are making a comeback. Reliance, after getting so beaten down, about almost a 20.5% correction is what the stock has seen from its 52-week peaks. Now it's making a comeback, 2% higher for that stock as we speak. Some of the tire names from within the broader markets, they too are doing quite okay. The breadth has nicely opened up. And we're sitting in the green with a count of about almost 167. Like I said, paints, the Berger is holding up nearly 4.5%. JSL is looking very smart. IIFL, Coal India, these are some of the other performers in trade as we speak right now. But Srishti, what about the newsmakers?
Well, certainly, especially today, it's just about the crude derivatives that are making it up the move, because Asian Paints has been one of the top gainers in the Nifty 50, and some of these tire counters are doing pretty well for themselves. Other than that, take a look at the power finances, because on the back of Macquarie's note today, we have PFC and REC buzzing away in trade. But on the bottom of your screen, you have Britannia that has now slipped into that red territory, as the company has informed that the company's CEO has actually resigned from his designation. Mr. Ranjit Singh Kohli has actually resigned from the post, and he was actually appointed in Britannia back in 26 September 2022. So on the back of that, this stock is seeing some reaction. He's highlighting that he wants to pursue some of the other opportunities outside Britannia. That's why he has tendered his resignation. So a sharp fall coming in on Britannia for now. And well, yes, Aisha, but apart from this, what we see that some of the other FMCG majors from the likes of HUL, Britannia, they are doing pretty well given the volatility in the palm oil prices. And all in all, the markets are also on the up move.
Yes, they are. But how much of it should you actually read into? Is it seem like it's a believable uptick? Is the rebound here to stay? Let's pose all those questions. We've got Naresh Mirani joining in on the show. Also have Sandeep Sabharwal with us. Naresh, first on the charts, because it was pretty choppy up until noon, and then from there we've seen a steady move up. Does it seem like it can build on further from here?
So that's how classically we form a bottom. There is volatility. We don't see a one-way upticks. So we saw a downtick in the morning, and now we've recovered. And in the downtick, we did not see a similar tick happen in the mid caps and the small cap side. So for now, we watch out for the next range, which is basically 22,800, which was the earlier support. So now we shift base from say 22,000 odd levels to 22,200 and 22,800 on the upside. And if we start crossing 22,800, then it becomes a much stronger rally. For now, it's a base formation here, maybe a range bound move from 22,200 to 22,800.
Sandeep, hi, afternoon. What's it looking like in terms of the macros, with the RBI injecting further liquidity, crude significantly cooling off, while on one hand, of course, the tariff flip-flop continues? Does it seem like we could be close to perhaps bottoming out at an index level at least?
I think I mentioned on Monday that we are fully deployed because in our view, risk reward is extremely favorable in India, given the fact that the macros will be much better next year as liquidity improves, interest rates come down, government spending improves, and a lot of disruptions which are there last year are no longer there. The other part which you mentioned obviously is there, which is the entire tariff issue. Now, the tariff issue impacts few industries more significantly from India, because if you look at the composition of the exports, it's medical devices, pharmaceuticals, gems and jewelry, textiles. I think these are the sectors which will get most impacted. And so some companies in these sectors could get impacted depending on what the overall tariff outcome is. But if you look at the picture holistically from whatever is happening globally, I think the kind of sell-off we've seen in the dollar index combined with the cooling off of bond yields, all of it points to uh, greater participation coming back towards emerging markets. So on a pure valuation basis, although many mid and small caps are looking very attractive right now, the initial up move as foreign funds come back, which I think they should, will be on the large cap side. So I think the large caps would, I guess, move up first, and then small and mid caps could catch up.
So that's the take on a couple of these crude derivatives. But yes, of course, given the cool off in the crude oil prices, some of these paint counters are doing very well for themselves. And Kunal, wanted to have your take on the paint counters, because it's Asian Paints, Berger Paints, Akzo Nobel having a gain of anywhere between 3 to 4% right now. Do you believe that the move has just started? Which are the levels that one should be watching out for, especially some of those Asian Paints and Berger Paint?
Yeah, specifically for these two names, what was happening earlier was Berger Paints had actually made a bottom, some time back, almost 1.5 or 2 months back, when the stock made a low of 450, sub 450 mark, and from there over the last 2 months, the stock was actually moving up higher. So I think it moved to almost 500, 515 kind of a mark very recently. From there, the stock has gone back to a consolidation, and now it's trying to pick up pace again and come back to that 500 breakout zone. So I believe Berger Paints could be an interesting bet at current levels. Asian Paints, I think, could be a big turnaround candidate, because the stock seems to have formed a major divergence on the RSIs on the weekly and the monthly charts, and I believe that could probably be an indication that we could be looking at much more stronger upticks into the stock going forward.
Okay, that's that on the crude derivatives, holding up very well from the word go, both Asian as well as Berger Paints. We're going to take a very quick break on that note. When we come back, we'll continue our market discussion.
Welcome back, and taking a look at the markets, some of these beaten down sectors that are having a good rebound. One such sector is the FMCG pack. And Sandeep, I wanted to have your take on this one, because palm oil prices internationally, they have been on a one-way run-up and definitely impacting the margins of the company. But given that we have already seen a good rally in palm oil prices, do you believe that that should somewhat top out in the recent past, as well as maybe it's the time to look out for some of those HULs and Dabur, Marico, some of these plays right now?
Actually, palm oil prices have not been on a straight run up. In fact, they had a run up at the same time when the import duties were increased, and that created a sort of double whammy for companies. Subsequently, they have only cooled off. But given the extent of impact which was there because of first prices moving up, then the 20% additional duty, the pass through of the prices will obviously take time. So I think that would have happened to a great extent now. Recent sell-off in FMCG and some consumer stocks was due to some sort of analysis done by some people that because stock markets have fallen, so consumption is going to suffer. I think that's very, very illogical, because last 2 years stock markets were moving up. So did that impact consumption positively? Consumption actually was subdued over the last 2 years. So I think it's inflation, it's interest rates, which are the main factors which impact the consumption rather than what is happening in the stock market in the near term. So I think to that extent, the bottoming of the performance has happened. What kind of volume growth will play out, that we need to see, because the recovery cycle is still to accelerate in any meaningful manner.
Given that you're all in the market right now, is the largest allocation or recommendation of allocation towards financials at large, both banks and NBFCs and even MFIs?
I wouldn't say it's largest, but it should be a decent allocation NBFCs, banks, the larger banks, and the corporate focused NBFCs, etc. I think they should be a decent part of the portfolio along with infrastructure oriented companies. Uh, Auto should do well next year, but then because of this entire tariff thing, we could see the auto stocks remain subdued for till the end of March. But I think next year should be overall good for autos as such.
All right, but Sandeep, also share your take within the metal pack as well, because off late they are doing very good and these stocks are seeing no stopping. So do you believe that is it a time to look at some of these metal plays, and within that any particular stock that is looking good to you?
Globally, metal prices have not moved up as much, but the sentiments have obviously improved because of one, European companies announcing that they'll be spending more on defense, and as such, that obviously requires more of uh, that will require more consumption of commodities. Plus, China also announcing an increase in the fiscal deficit for next year and focusing more on reviving the economy. So I think these are the sentimental factors impacting metals in the near term. So metals could continue to do well, but then there is significant oversupply still in steel. So I think to that extent, uh, the rally could still continue, but I wouldn't say that it should be a trend reversal.
Sandeep, you've gone on record and given us your calls when it comes to both infra as well as banking names. But when it comes to auto, it's largely the two-wheeler segment that you're recommending exposure to. What about the passenger vehicles? I mean, tariffs, of course, is one story, but there's also Tesla's entry into the Indian market. Do you think that's going to have any sort of repercussion for the likes of a Hyundai or even an M&M and Tata Motors?
So the impact could be in the long term if these companies don't innovate and adapt, because the initial presence will be limited. They'll take a long time to build a pan-India uh, network. So in the metros, some people might be inclined to buy those cars, and that also we need to see how the government moves on the entire import duty front, because they have a scheme where you can import 8,000 cars at a lower duty if you say we'll invest 4,000 or 5,000 crores, something like that. But that itself is a time consuming thing. We'll see. But overall, I think I think the market, if the overall market is doing well, it can absorb uh, a company like Tesla coming in, because it's not going to dominate the Indian, the entire automobile space, at least for the next few years. So the largest allocation we have is in Mahindra and Mahindra. They continue to do well. I think they'll continue to do well going forward also. And in terms of two-wheelers, I think both Hero MotoCorp and Bajaj Auto are looking cheap. So we have been buying Bajaj Auto, but it's come down. But I think it has significant value at the current prices.
Watch out for Bajaj Auto, and that is the stock that even Kunal was flagging off this morning on the technical front, of course. But Sandeep, within the auto ancillary pack, any particular segment that is looking good to you right now? And specifically, if you can share your take on the tire counters, one of the crude oil beneficiaries, and given the fact that the demand is expected to be steady, especially from the two-wheeler segment, the passenger vehicle sales is expected to be just flat when it comes to the domestic market. Do you believe that this is the time to look out for some of these tire counters, given the fact that in the past 1 year, stocks like Seat, Apollo Tires, they have only underperformed?
I think the sector overall seems to be well placed, because last few quarters they have taken a big hit on the margins, because one, the tire prices could not be increased. Secondly, we saw a huge spike in rubber prices. Now rubber prices have moderated over the last few months, and going forward, I think we could have seen the bottom of the margins for tire companies, or we could see the bottom in this quarter. I guess it's possible that it would have happened last quarter. On top of that, crude prices have also come down, so crude input derivative prices will also come down. So And valuations are cheap in the overall tire industry landscape. So I would think that this sector is a decent one for people who are value investors at this stage.
Kunal, what's your thought though on Asian Paints? Does it seem like it's bottoming out or close to it?
Yeah, it looks like, because I think both Berger Paints and Asian Paints, both of them, they were at a point where these stocks were huge underperformers, specifically Asian Paints. When you look at it relatively in terms of large cap names, in terms of the way the stock had behaved in the last 2 years or so. So I think it looks like now that Asian Paints is coming out of that deep underperforming zone. The last 2 days of candlestick pattern volume pickup today specifically, I think indicates that this is a wave of a fresh buying into the stock price. And then I think even for Berger Paints, I would believe that closer to the 500 mark, one could look at a potential breakout. So if it's a near-term play, I would look at Berger Paints with a potential target of 540, 550. But if it's more of a medium-term time horizon, then I would probably believe Asian Paints could be at the cusp of a turnaround.
All right, that's the take coming in on Asian Paints on the technical front. But with this, Sandeep, we'll let you go on that. Really appreciate you taking the time out and speaking with us this afternoon. But sticking with the paint sector then, Birla Opus is taking strides to mark its presence in the paint industry with the launch of its company-owned Birla Opus Paint Studios, apart from the existing franchisee stores. With this new format of the paint studios, it intends to enhance customer experience and provides all-round home care. Here's a sneak peek of their stores and the CEO's roadmap for the business.
When customers came in, and when we'll rotate this, it was such a fascinating process for them. So we decided to celebrate it more. So as you can see, that's where the color gets picked. So the color that you bought, it sort of comes magically into this color composing machine through these. And these are the various colors that we have. These are the sample pots. So, the color sample pots. And you can actually, this is how the color mixing happens. So different droplets of different colors combine to form the color that you have made. So we actually have a beautiful process where, you see the video, you see how the color is made, and you take home the color that you like.
So, we say that we can make 2,400 shades. Now, for consumers who are not involved in this category, who come into, I have to get my house painted, they wonder, so we don't manufacture 2,400 shades.
Okay, that's the management of Birla Opus speaking with us exclusively. In the meantime, let's get in some closing trade ideas as well then. Naresh, what's on your list?
So that would be a buy on Coal India. The stock has corrected a lot and giving a reversal signal today. Good price volume action. Would expect a bounce back towards 400. Stop loss to be kept at 378.
Right. Kunal, what about your ideas?
I'll go to buy on Asian Paints, expecting that the stock would probably have formed a near-term bottom for itself also.
Okay, betting on Asian Paints, that's Kunal's strategy. We're going to take a very quick break, come right back. We'll continue tracking the last half an hour of trade this afternoon. Holding up 0.7%, and that volatility that you had in, up until the noon session, that seems to have, completely cooled off, 200 points higher. So it's looking good so far, at least. Let's welcome on board Sudeep Bandyopadhyay as well and find out what are his thoughts on the market right now. Sudeep, some of the markers at least seem to be reversing. Afternoon, firstly, crude is on our side, and now RBI also is pumping in a whole lot of, liquidity in the system. Do you think that's enough to turn around the markets?
Well, it may not be enough in the long term, but I think short-term market is very much excited. Also, you must remember that a lot of good things are happening in Europe. Their debt ceiling, which they had imposed on themselves, they are, agreeing to breach that. So is specifically Germany. And I think incremental liquidity, incremental economic activity in Europe is good for, countries like India. Dollar index is also coming down. You mentioned crude is already down. I think these are good indicators as far as India is concerned. But we have to be careful. FII selling hasn't yet probably abated. And we'll have to keep a strong watch on that. Look, FIIs have been holding mostly IT and BFSI stocks. These were the two favorite sectors. And, the recovery isn't that sharp in IT and BFSI yet. So obviously the selling by FIIs is probably still on in those two pockets. A lot of other segments have picked up quite a bit, but not IT and BFSI.
So the other sectors might have peaked, but not IT and BFSI is the take coming in from Sudeep. But we have been speaking to Global Voices, and today we spoke with Vivek Paula, who is the head of portfolio research at BlackRock Investment Institute, and he believes that the structure of the opportunities is sizable in India. He also says that for someone with 5 to 10 year horizon, now is the time to build your portfolio in India. Let's go across and listen into him.
Structural opportunities are sizable in India. So if we were thinking for anybody with an investing horizon 5-10 years out, we would be building portfolios today using our core IP where you'd hold a greater allocation than a benchmark weight. And that's true for the bond market, that's true for the equity market as well. And that's a function of structural dynamics being positive for India. But on the structural side, the demographic sort of forces underpinning India are really strong. Most of the developed markets, China, are going to experience a shortfall in working age population over the coming 20 years. India's going to experience a big gain in working age population in the coming years. And you think about the geopolitical dynamics that we're in now, a multi-aligned country such as India is likely to benefit from that sort of environment more in the future. Right, if you were to look at current price earnings multiples and compare them to the past, it's not obvious that it's cheap by any measure, right? People have been talking about that being expensive. But actually, if you think about things in a slightly different way, if you think about the risk premium associated with Indian stocks, I would argue that's not particularly expensive in a historical context. And the reason why I get a different answer for that story than the other one in terms of price earnings metrics is taking into account future earnings growth, taking into account the future path of rates being different from the past. I actually would argue that on a long run basis, particularly in large caps now, it is not the case that Indian equity are particularly expensive. And that's part of the story for us as to why we think on a structural horizon there's an opportunity. The valuation story that I would argue is actually still, I don't think it's as expensive in Indian equity, for India, over when I take a broader kind of lens and look at the risk premium dynamics.
Okay, that's the view coming in from the house of Goldman Sachs. BlackRock Investment, I beg your pardon. Vivek Paul speaking with us exclusively earlier this morning. But Sudeep, you know, the consensus call on the street, and especially more so after the RBI's measures to inject liquidity in the system, seems to be buy banks, buy financials, and stick with the larger cap ones, you know, to be on the safe side. Is that your thought as well?
Oh, absolutely. I've been recommending that for quite some time, and I'll continue to mention that. I think, you know, beyond the RBI liquidity injection and other positive developments, the banks were really attractively valued. Post this correction, some of the larger banks, particularly SBI, was looking very good, and somebody willing to build a long-term portfolio, SBI was definitely a good buy and continues to remain such. Apart from that, I think, you know, some of the down and out banks, you know, which took a hit because of multiple reasons, particularly asset quality issues on the microfinance book. I think the time is coming for having a look at them. IndusInd Bank is, for that matter, one bank which I will definitely recommend from a little aggressive investors' point of view. I think we have seen the worst, and things should improve from here on. So, you know, it's a good time to start buying into IndusInd Bank as well.
All right, good time to buy IndusInd Bank. That's the word coming in from Sudeep. But today, a lot of these sectors are doing pretty well, especially the PSU pack, because we have been talking about the move in the OMCs. But other than that, stocks like Coal India as well as NTPC, they are doing pretty well for themselves. Coal India was the stock that Naresh flagged off a while back. But help us with your take on some of these power-related counters, Naresh. Stocks like NTPC, Power Grid, they are holding on to the gains of 3 to 5%. Any stock that is standing out amongst the two?
So both NTPC and Power Grid. So we looked at NTPC when it was making a double bottom around that 300 mark. Now what has happened in the last few sessions is it crossed the interim highs around that 330, 35 mark. So that's a confirmation of a short-term bottoming in place, and we could go all the way to 370. Then we look at Power Grid, very similarly placed, a large correction done from 365 all the down to 250. The interim highs for the last few weeks have been crossed. And also we can slowly and steadily make a bounce back towards 290. So both the stocks become a buy on dips from here on.
Okay, some of those power plays, a buy on dip, that's the call coming in from Naresh right now. But let's also hear out, what the globe is making of India right now. And here's a very interesting word coming in from the House of Amundi and what they're making of the India markets and the kind of valuations and how India, of course, is positioned right now amidst just such a turmoil global market. We just a short while back had the head of Asia Investment, Florian NATO, explain to us how US equities may have already peaked out and what then would it mean for dollar as well as emerging markets and of course India.
On the US dollar depreciating, it's happening already, but not versus rupiah or versus some emerging currency, but it's happening already versus yen, versus euro. You may see that the euro has been moving 5% already, appreciating. The yen as well have been moving 10% over the last 3 months. So the dollar has been depreciating in trade weighting terms, but not versus some specific EM currencies. Second point, we are strong believer, and it's part of our outlook for this year, that the US performance, the way the design of it was not sustainable. It was too concentrated, lower breadth, and indeed those stocks, those Max 7 stocks, deserve to perform well because they have been having strong guidance, strong earnings, high bar, and they have been matching the bar or exceeding the bar. But we do believe now that the S&P will perform less than other markets because S&P the performance should broaden to other stocks and other sectors. And we do see as well flows moving out of the US.
Welcome back. Just a few minutes left before we shut shop. While we look at the benchmark indices, it's Nifty Bank that has cooled off a bit from its highest point, while Nifty actually sustaining comfortably above that 22,550 odd mark. It's looking like we are in for a decent closing, but let's also watch out for Dow Jones futures as well, because over there we are seeing a 300 points of decline onto Dow Jones futures. So let's see how the US markets pan out today, because we will be, of course, watching out for the jobless claim data. But Sudeep, back home, what we are seeing is that the pharma stocks, they are day by day inching up higher. Some bit of a strength is returning in this particular pack. So given the flip-flop in the US term tariffs, what we have seen coming into autos, do you believe that the correction and the concern in the pharma space in the Indian players is overdone now, and it's the time to once again look back seriously into this sector?
I think, I still believe that it's better to be a little cautious. I think, the US is going through a phase where, volatility is the name of the game. Every morning there are new things coming out, and, by end of the day, there are further new things getting added. So amidst this volatility, it is little difficult to, take a call, at least for the short to medium term on these pharma stocks, which most of them have significant exposure to US. Yes, the cost of manufacturing, which is the alternate being proposed in US, is probably 5-6 times compared to, the same in India. But, these are not fully rational at this stage. There are a lot of irrationality, in this decision making at this stage. So if I do like pharma, and I believe that pharma is at a space where IT was 15-20 years back, and the quantum leap in pharma is bound to happen. When it will happen, I don't know. But at this stage, if somebody has to play pharma, I would definitely say look at domestic focused pharma companies. I do like Mankind Pharma quite a bit, and that can be looked at definitely. Their BSV acquisition was criticized, but I think it's a fantastic long-term strategy. I also like pharma companies like Piramal Pharma, which have got significant manufacturing facilities in US. So if you have to be a little safe, still play pharma, go for domestic focused pharma companies and pharma companies having significant manufacturing facilities in US.
Quite interesting. That's the take coming in on pharma right now. In fact, let's address some of those pharma movers. Piramal Pharma, of course, is one stock that, Sudeep just talked about. Let's bring out its 52-week chart and see how much it's actually fallen in this correction, because it sure has had its, share of damage. But if you were to take stock of the last 52 weeks, you're still actually sitting on near about a 60% gain, 57% of a gain is what Piramal Pharma is actually still sitting on, hovering around the 200 odd mark. Naresh, tell me, how did the charts read for Piramal Pharma?
Going through a huge phase of consolidation for the last few years, the stock started making a trending move. The move was above that 160, 180 mark, which was the listing day high. And now we are back to closer to those 180 marks. So that's a good entry point for the medium term. Volumes have been good in the previous rally. Even now on the dips, there have been decent volumes. So at current levels, looks like an interesting place to accumulate. This could be one which could again lead back, go towards 250 odd levels in the medium to long term.
All right, that's the take coming in on Piramal Pharma. Let's watch out for that. Other than that, Cipla, Lupin, they're also holding up well. What we are seeing is some of these IT counters like TechM as well as Infosys, they are not doing that well in today's trading session, and especially TechM. The stock didn't fall in the initial trade, but ending the day with a cut of over 2% right now. But with this, before we shut shop, let's also take some of the BTST ideas from both of our experts, Then and Kunal. Any stock that is standing out for you at this point in time?
Yeah, I'll go with two buy calls, and the first one is about Axis Bank, a stock which apparently has been more sideways, but I think at 1,030 levels for Axis Bank, it looks like the stock is on the verge of a pennant kind of a breakout on the daily chart. So we'll look out for targets in the range of 1,075 and stop loss at 1,014. Raymond is the other stock which I think is also nearing a major bottom for itself around the 1,300 levels. Looks like that over the last 2 days, the stock and the volume patterns have started to improve for the stock. So expecting this the stock to get a follow through up move. 1,500 as a near term target. Stop loss to be kept at 1,270.
All right, so those are the stock calls coming in from Kunal. But Naresh, what about you?
So first would be a buy on Coal India. The stock has made a double bottom around this 350 mark and has started reversing sharply. Stop loss at 378, target price of 392. Second is a buy on Aarti Industries, which has gone through a very sharp correction. An oversold bounce and play out here. Stop loss at 407, target price of 425.
All right, those are the calls coming in from both of our experts then. But yes, of course, Nifty 50 is giving us and indicating us a strong closing for ourselves. We have once again managed to scale back that 22,500 mark as well, while Nifty Bank 121 points of gain. But Kunal, a while back, I remember when the markets were on the one-way down move, you were actually discussing about that Friday impact, that Fridays are generally not that great for the markets of late. So tomorrow is Friday. How do you see the closing?
This Friday should be different. And yeah, so I think we've come out of a major correction, and I think now the sentiments have started to improve. I think what matters over here is that how the index holds up after this third consecutive day of gain for itself. So this is the third consecutive day we've moved up 500, 600 points. If you look at 21,900 thereabouts is a low for the Nifty. There could be a pause for the index for the next couple of days, but I think what this move has done is because many of these stocks have managed to make a comeback. Some of the stocks are at multi-year highs. Some of them have come back above their long-term moving averages, like the metal stocks, etc., which are trading above their 200 DMAs. And then some of them have recuperated losses of almost 1 to 1.5 odd month, over the span of the last 3 days of a bounce. Now, when you see such kind of a scenario where stocks, they generally tend to move up in their own trajectory, depending on the beta of these individual stocks, we expect that the move for the index would strengthen going forward. So I'm not too much concerned about the potential Friday move for the indices, but I think potentially over the next 1 week to next 2 weeks, you could probably expect the index to see a follow through up move. 22,800 is where I would believe that the index should head towards.
All right, so let's watch out for those levels. But Sudeep, today, of course, the heavy lifting was done by Reliance Industries, because we were just discussing that how brokerages are now coming up with a re-rating and spotting Reliance as a re-rating candidate. And we all know that there wouldn't have been any fund manager who would not like Reliance and who would not have Reliance in their portfolio. Give us a sense that, do you believe that Reliance can actually outperform the benchmark indices in the next 1 year? Because in the past 1 year, it surely has underperformed significantly.
Definitely. I think there are multiple triggers, and I think the research reports you're referring to are talking about some of them. I think the biggest trigger is going to be the Geo Platforms listing. The IPO is expected to happen sometime during the next fiscal. and that will be a significant value unlocking event. Also, the tariff hike as far as Jio platform is concerned is expected. It may happen, in this calendar year, or it may get pushed back to the February, March of next calendar year, but it's going to happen, and that will again have a positive impact. As far as retail is concerned, I think we have seen the worst. The footfalls are increasing, the coverage is increasing, and going forward, I think even retail will start to do well. O2C has been a bit of a soft spot for quite some time, but I think there are expectations of O2C also performing and outperforming. So overall, I think value unlocking will be the #1 trigger, and beyond that, sheer performance improvement also will definitely help the counter and help the script.
Coming in on Reliance. Naresh, what's your reading on the charts? I mean, how much more can actually Reliance move up? Because it's been thrashed, what, almost 20.5% in this recent fall in the market? Naresh, you'll have to unmute yourself.
Yeah. So if you look at Reliance Industries, the previous bottom was 1220, which it was holding for the last 3-4 months. A break below that did not see large selling pressure, and now sustaining about 1220, 1230 levels would be an indication of a false breakdown, and we again go towards 1330. So the first expectation is that eventually it goes back to 1330 odd levels.
The take coming in on Reliance Industries, 1200 thereabouts is where it's currently at. By the way, the index has completely given up all of its gains. Just look how we're actually cooling off right now. No, sorry, I stand corrected. That was another chart. Got to refresh my screen there. Still holding up 190 points up in the green. There's, of course, Asian Paints, there's Coal India, there's Hindalco. Reliance is now moved up about almost 3% odd. And then, of course, there's a Tata Steel, Bajaj Finance. These are all names which are still looking good. What's not? HDFC Bank. That's lying lackluster in trade. Trent as well, lower by about 1%. There's Kotak Bank and BEL2, which is languishing at about 0.7% or so. So then what happens to the entire PSE story, and in particular about defense? I know it's a fraction of when you bought that stock, but after the recent fall, do you think they will show the same kind of leadership as they did perhaps 7 to 8 months back?
Well, I don't think they will show the kind of leadership which we did see them demonstrating about 7-8 months back. I think that was a bit over the top, and a bit irrational. The valuation was definitely out of sync with the fundamentals. Things have cooled down quite a bit, but even then, I think they're not cheap even today. But I do like BEL, Bharat Electronics, quite a bit, and I've been recommending a buy there. Look, it's in defense electronics, and it caters to Air Force, Army, Navy, all the 3 segments. They have gone into exports as well. It's a very well-managed company, strong balance sheet, and they are now moving out of defense electronics and into major other areas like metros, the metro travel. So I think the opportunity for this company to continue to perform and outperform is significant. This correction should be taken as an opportunity to accumulate this stock.
This correction should be taken as an opportunity to accumulate BEL at this point in time. And yes, of course, we have been discussing about BEL for the past couple of days, and especially on the back of the ramp up in the European defense business, and the stock has also seen a good jump this particular week. But with this, would like to thank you, Sudeep, Naresh, as well as Kunal, for taking the time out and speaking with us this afternoon. And also, let's hand over to Snehi then to know that how did the markets pan out today. Over to you, Snehi.
Yes, let's take a look at how today's trading session has panned out, and overall it's been quite a decent trading session for us. We inched up some gains yesterday. It's the second consecutive session where the Nifty is closing in the green, and an 0.8% jump is what we are seeing on the Nifty today. 200 points on the intraday basis, but more than a 300 point uptick coming in from the day's lowest point. We're looking very comfortable above the 22,500 mark for now. So that's on Nifty. Let's pull up the Sensex and take a look at what the Sensex is up to in today's trading session in tandem with the Nifty, and 0.8% uptick coming in for the Sensex as well in today's trading session. Let's pull out the broader markets because while the Nifty mid-cap was largely in tandem with the benchmarks today, the mid-cap has seen an uptick of 0.2%, so slightly simmered down on that terms. Given the Nifty small cap index that was outperforming the benchmarks today, a 1.1% uptick coming in on the small cap index in today's trading session. Let's see the advance decline ratio that was very steeply in the favor of the advances, although at one point of the trading day we had 2200 stocks that were trading in the green. Now that's almost dropped to 2100 odd levels, so not bad, not much, but on the back of that, India VIX is spiked up very nominally in today's trade, a 3.5% uptick coming in on the India VIX. 13.7 is where we are at. Let's take a look at some sectoral winners and losers in today's trade. Metals continue to shine, and 8% intraday uptick coming in for the Nifty Metal Index, and names like Vedanta were in focus today. Vedanta was up 12%, Jindal Steel was up 11.5%, Hindustan Copper, Tata Steel, Hindustan Zinc, Nalco, Hindalco, NMDC, SAIL, all of these stocks were in focus in today's trading session, so it's looking very good for a couple of these names in today's trading session. Let's move on and talk about some other sectoral indices. Then you had the energy pack that was in focus, and in fact, on a positive note, all of these indices have closed in the green today, so it's looking very good for all of them. Energy, PSU banks, realty, pharma, FMCG, auto, IT, and Nifty Bank. That's the pecking order of all the sectoral gainers in today's trading session. Let's talk about a couple of stocks that were in focus today. Castrol India was in focus, was a high flyer in today's trade on the back of a source-based news flow coming in from Bloomberg last evening that Saudi Aramco may be mulling bid for its assets. Bharat Forge was in focus as well. Kalyani Powertrain has partnered with Taiwan's Compal Electronics to manufacture servers in India. So Castrol India, an uptick of 10%. Let's pull up Bharat Forge and see what that stock was doing in today's trading session on the back of a positive news flow. Last we saw, yes, a 3% uptick coming in on that stock. Airtel has won back-to-back orders over the last couple of minutes. A very sharp spike came in the stock when that happened. Greaves Cotton was in focus today. PFC, REC were in focus on Macquarie, and last but not the least, we have to mention Nifty Wipboy Reliance in today's trading session. A couple of upbeat brokerage notes coming in on the back of that. Reliance was also surging 3% in today's trade, one of the biggest gainers on the Nifty, and has helped kept the index afloat in today's trading session. But that's how we are shutting shop for the day. We're looking good above the 22,500 mark, and let's hope this positivity and this positive streak that we're seeing, the two-day winning streak on Nifty, continues in tomorrow's trade as well.